Good morning, and welcome to another edition of Roadhouse Last Call. Need some type of reverb, some suches and whatnots. This morning, we have the Benda, we have the Stockington. Benda, how are you, sir?
Hello.
Hola,
No.
como
No.
se dice, Benda?
Oh my god. No. So my son is a freshman this year and he's taking Spanish and it's I'm glad that he's like trying to practice, but he just throws out shit that he has no idea what he's saying, what it means. It's not in the right context. It's not, and I don't know Spanish, but I know a little bit. Um, but it's pretty entertaining some of the stuff that he says. I'm like, what does that mean? He's like, I don't know, something about the library. I don't know, something about
Have you
It's
ever
entertaining.
been to Alabama and heard them try to speak English?
Yeah, God, yeah, I've been to Alabama. It's been a long, long time, but yeah, it's entertaining. Yeah.
Oh, that was fun. Made myself laugh. That's good. All right. Okay, so the main piece that I kind of gravitated towards this morning, Bender, was the speech that Mester gave this morning. I took some quotes from it all throughout, basically, again, talking about monetary policy. Current, it's like I strongly suggest everybody, really, really read that thing over, or at least look at the clip notes that I posted within there, because it lays out a fairly strong framework for where their mindset is. Um, some of the quotes in there are just so, it's like even the piece that I wrote a couple of days ago, Benner, I don't know if you had a chance to read it about the Fed, but it's like they're just saying it in terms that are palatable as opposed to the fact of what they're trying to do. So again, I don't know if you had a chance to read it,
Is that on the
but it's like
Substack
if
thingy?
you,
Was that
yeah,
on?
the little
Yeah,
the Substack.
I have not looked at the
Um,
Substack.
it's like that's again, we're in an environment to where they're not willing to necessarily back off of the tone until the economy is in full on wreck mode. That's the bottom line. That is their mission. When you start talking about returning to a 2% inflation when we are where we are, there's you're going to have to raise rates, and keep them elevated for an extended period of time. And based on some of the language that's being put out there, the only way that they're going to hedge or pull back on that stance and tone is if the economy collapses. Again, goes back to the whole Uma Pulp Fiction thing. Same thing. It's that's where we are, and the messaging continues to point in that direction. Now, with this being said, yesterday on Flow at the end of the day, we had a couple of things that happened. Um, Apple came within a couple of pennies of filling its gap from ER. Palm, who I don't know if Palm listens in, but he is a contributor to the room. Very smart individual. Has really identified some lines in some areas and some. There's a different perspective that I think is extraordinarily helpful. He identified this area around 396, and that is indeed where we bounced yesterday. That also coincided with Apple coming in within pennies of filling that gap on the daily. So we bounced and we rallied. We saw some fairly strong short covering and through there. There's still the devil is still out there, full on. And the one thing that I really want to make clear, until this environment and this narrative with the Fed changes, we have to, in my opinion, once again, we have to re-enter that mindset of finding certain areas that if we're long, to take profit, potentially go short. Um, until something changes. And I don't know, I don't like this game at all. And I've said it over and over again. There are the messaging out there is really, really poor. And I don't know how it gets better until it gets worse. So that's kind of where, mindset will be sitting. But a lot of this is flow centric. We did see covering, but the one thing I said a couple of days ago, and I said it yesterday, and I'll say it again today. This version of bear, this is the smart bear. This is the bear that is willing to be like, okay, y'all have your fun. We're gonna lay up. We're gonna sit right here and wait for you to come to us. We're going to throttle you. That's what they did last week. Yesterday, we had a big, nice pop and everything looked glorious. They sold that shit off faster than all bloody hell. And we made a new low. So this is the environment that we're in. I'm looking at that 401, 402 level on SPY maybe to kind of reevaluate things as far as the upside plays. And then odds are, unless I see something significantly different on flow, I'm going to look to get back short again. And I'm going to keep on cycling this out until I see something different take place. That's what I have. That's what I think. That's what I know. Be my truth. It says 30 seconds. Have I done 30 seconds? Benda?
Yeah.
Okay. So with that being said, Bender, what you got for us on these levels?
All right. So I think we need to, zoom out a little bit. I'm going to give you two levels today, 39.60 and 40.70. And I'm going to show you why. Post this first chart here. This is a longer term chart. Make sure this comes through. That's the weekly. And you can see the arrows that I drew, those circles that I drew. The lower arrow right around 39.65, and that upper arrow you can see that I drew was right around 40.70, 40.74. Here's a zoomed in, same chart. That's a 34 minute, and you can see that 40.74 level, up there. That acted as resistance on the last bounce. So the reason I show that weekly is because you can see, all the activity that took place, back in February, March, 2021, and then, all of the activity that's taken place in this zone, in May and June of this year. So it's not surprising that, we've dropped back into this area, retested that support, that 39.60s in there, which was previous resistance. It's not surprising that we test that and that we bounce. I don't know what we do with it from here, but you can see the importance of that, right? Because if the 39.60s give, and we're still looking at the longer term chart, obviously we'll find levels in between, but if that gives, then we've got 3900, and then back down to 3880, and then we've got that previous trend line resistance, the longer term parallel channel, which was previously resistance, that comes in all the way down around 3800. So you can see why we're bouncing here. We've got as far as just kind of levels to watch today that are closer to where we're at. You got obviously 4,000, which we're just above it now. We need 40.20 to reclaim trendline support, which also happens to be the 50 MA on the 60 minute with a fib at 40.23. So those 40.20s, if we pop above that, we could get something going. 40.76 is where those sellers came in and hit it hard on Friday. And then above that, 4100. Um, just below here, got a fib at 39.80. That's also previous support, and then 39.60, 39.65 support from yesterday. And I gave you the levels below that. Make sense? Good.
No, it definitely makes sense. It's like it's tough because it's like this is. Would you agree that this environment is where you got to trade and look for maybe some longer term opportunity here and there? Is that
Yeah, I think we might be jumping the gun a little bit. I think what you've said recently is probably the right approach, which is, uh, yeah, look for those opportunities. Just you can't get too comfortable
no, you can't.
until you know until we see something that until things start turning around. It's like,
Hmm.
um, you know, just to put it into perspective, I guess a little bit. So we're currently at 4,006. If I go to a monthly chart and I use the the 50 the 50 MA on a monthly chart, which is essentially in 2018, we pulled to the 50 and bounced off it. The 50 is at 34.86. I'm not saying we go there. I'm just saying that if the narrative continues to worsen, and they decide they really want to crash this fucker, um, we just have to be aware that we got a pretty big level at 35.85, and below that,
Hmm.
um, 34.86 is the 50. And then just for fun, let's look at the 100. And I say the 100 because the COVID drop, the COVID crash, essentially went down to just above the 100 MA on the month. Now I realize that's a ridiculously long time frame, right? A ridiculously long moving average, but that's what it bounced off of on the COVID lows, just above that. That number comes in at 28.51. I realize how ridiculous that sounds, and it is, but I mean, just saying that, don't get too comfortable, because until things really improve, um, we just gotta kind of be on our toes. As long as these 39.60s hold in here, I think that's a good sign.
I think
Um,
it's a great sign.
yep, we just want to
I think it's
see
a
it
great sign.
continue to hold. Otherwise I could see us go down and retest, say 38. Let's see, 30. Not right away, but that longer term trend line. I mean, that would come in around 3,800, depending on how long it takes us
Hmm.
to get there. So, yeah,
Which
just don't get too
really,
comfortable.
look, all the pieces for the puzzle are there to make a significant move lower.
Yeah.
It's like it's all sitting there. I, and the reason, and I just want to clarify my statement. So yesterday I bought, like, let's say a quarter position of a full position, both in Tesla and SoFi with commons. Quarter position. I'm prepared for it to go lower to add more. I'm also prepared for us to stabilize around this level, the lows that we made yesterday at 39.60, to stabilize in and through there, um, until the next shoe drops, whatever that may be. So with that being said, these are quarter positions that were added. When I sold Tesla basically at that 930 pre-split level, I sold almost all the Tesla that I've had. I moved off of it. Whether that was a good idea, bad idea, I don't know. I guess we'll see in the long run if I'm able to accumulate an average properly on those. But these environments give opportunity if you're willing to be disciplined with it. They give opportunity. Um, and we have to take advantage of that opportunity. and play the long game and short game. And I'd say long game and short game, not buy long, sell long. I'm talking about looking at what's 5 feet in front of us and what may be a mile ahead of us, and kind of navigating that the best we can. And the only way to do that is with discipline, combined with being aggressive. I know that's hard to factor in those two words together, aggressive and disciplined, but that's what we have to be within this market. Shit ain't easy right now. It is not easy. So let's be wise. Let's be smart. Bender, thank you for those levels. Do you have anything else you want to add in on this?
No, no, I think that was all I had.
Okay. Stockington,
Shoot,
what do you have
sorry,
for us?
I was on mute. No, that was it. That was the gist of it.
All right. Stockington, what do you have for us, Stockington?
Hello. Good
How was your
morning.
field trip?
Oh man, anticlimactic. It
Shocking.
was like you want to see something that's going to be cleaned up in 2 to 5 years. I guess so, but now it's just boring, empty work.
Yay, a bunch of government booger eaters going out to look at a busted up field. Yay.
Yeah, times. So yes, I survived the field trip.
I'm curious, on your field trip, did you guys stop for like coffee and snacks and lunch?
We did not. We stopped
You
at
didn't.
lunch. We don't give
You
you
did.
lunch. We don't have
You
time
did
for
have. Did they feed you? Did the taxpayers give you money on your fucking field trip?
No, if we're gonna have anything that has to do with food or money that we're gonna have lunch, we buy that. We buy that
Oh.
lunch. Pack your own lunch.
Oh.
Yeah, exactly.
Good. Maybe I have faith in the system. Very nice. Very nice.
Yeah,
Okay.
we've had fundraisers for our own parties, if that puts it in perspective. So
Sounds like something I want to know nothing about. Okay. So can you tell us what you see, buddy?
all right. I did. So I put in here on Discord, on Twitter, just doing a little bit of adjusting to the watch list process because we pretty consistently have not been opening where we closed the night before. Being in California, I like to do my research the night, when the market closes, but because of Roadhouse last call, I'm waking up earlier, so I have time to look at these charts and adjust the triggers and whatnot. So
Say thank you for forcing you to be a productive individual. Say thank you now. Thank you.
Oh, thank you, House, for making me wake up earlier and
You're
earlier.
welcome. You're welcome.
All right. So Microsoft had some dark pool last night, $503 million at 262.97, and we have drifted up and bounced off that. So I had this line 266.50. Let's see if we can break that for us to move to the upside. And then there was another dark pool. This one was from last month. 264.51, $442 million sitting right there, and it has bounced off that as well a couple times. So I'm going to watch Microsoft reaction to those lines. Tesla, I had put a line to the upside at 280.85, and then to the downside, I'll be watching 277.2.
You said 280.75 on. Okay, that makes sense. It's like because 280.65. That's where the 377 is running through on the 3 minute. So that's interesting. That's an interesting little mark there.
Yeah, and it kind of like wicked down off this 280 something pre-market. So, and then we've got like some orb lines from the past couple days above 284.05. Looks like yesterday's lower orb. I was going through the options alert stream because I didn't get to watch a ton yesterday, and there was like 3 repeater bearish alerts on Tesla, so that'll be interesting. Nvidia, I posted the chart. It's kind of a crazy looking chart there, but I drew this parallel channel that Bender uses. I talked about it in the video from this weekend. I'm going to be looking. I had a 50% retracement fib drawn on the 4 hour that lines up at 154.1. And then to the downside, I had a line 152.25. I'll be watching Meta off Swan's list, just kind of like a note for people that want to create their own levels, watch their own tickers. Swan's list for today, the triggers are basically just yesterday's orb. And it's just kind of a good reminder that, it doesn't have to be rocket science to come up with these levels. It's just rinse, repeat, because yesterday's lower and upper orb would still be important. Only other thing I had, there was signature prints on the SPY last night, Pro 260. I don't know if we have Sun's dark pool post or if he's here today, but ATVI had some dark pool apples, so maybe check out the historical if those are tickers that you like to trade. And that's all I got.
All right. So we had one of those weird wicks this morning on SPY pre-market. That wick ran up to 401.11 and ran down. What was the low? 397.77 is where those wicks ran. Pre-market low on SPY was basically 397.60-ish, somewhere within there. Pre-market low. We have a couple of things working. End of the month and new month, don't we get some type of like pension fund rebalancing and money coming in from 401ks and all that kind of stuff? Like when we get a month flip over, that kind of stuff happens. Something like that. I know we have a rebalancing. I think Sun mentioned that. I know Bender's mentioned some, plumbing things to me within the market over the past couple of days as far as some stuff that I don't understand. So a lot of this stuff in move up can be somewhat, I think, illusionary. And we have to look at it from that standpoint and adjust accordingly. So right now, currently, I am long Tesla and I have a short on Amazon that I reduced down to act like a hedge overnight. I do expect for us to get some type of a covering squeeze and a move higher. Flow after European close is going to be really, really telling. So that's kind of what I'm looking at. We also have a substantial number of data points throughout the day, anywhere from gas to, I believe Chicago PMI comes out, all of those types of various pieces. So we have to be aware with a head on a swivel. Let's be sharp. Let's be tactical. Let's get that cash. Bender, Stockton, you guys have anything else?
Nothing for me.
All right, guys. This concludes another episode of Roadhouse Last Call. Thank you for listening. See you soon.